I'm gonna go over the initial offer which we had, which was kind of soaked up and it wasn't very didn't really punch as I expected, and then I'm gonna kind of go over the second attempt, which actually did punch, was a lot more kind of in the realms of what I was expecting. And yeah, and this is just kind of the importance for me sometimes when you have like these kind of structures and ideas in play. Knowing the price action you want to see prior going into a position is really, really important. Just how the market's trading, it just kind of gives you that impetus to potentially be slightly more aware to cover, as opposed to, you know, trying to hang on. So these are those 13 3/4. I was kind of aware that the market was going to potentially thrash around here, that we were going to get a bit of a kind of two-way trade range in this area. So like I said, I'm kind of scaling into a position which I do get a reasonable amount of size on in this kind of area. But yeah, like I say, I was kind of aware that we might have to work this kind of region. And for me, when you kind of had these kind of distinguished zones, like I was the 13 3/4, it was going to be very kind of clear reaction for me. It was either going to be the market was kind of have you know, kind of this kind of passive offer into them, kind of get played back into range, back into value, or we were going to punch away from here and kind of have that kind of more initiative, flows as opposed to kind of responsive buying. So like I said, it was kind of I was aware, I was basically waiting to see the reaction below here and then trying to find a range, establish a range, which is why I started with a smaller clip, and then I'm trying to time that kind of liquidation move here. And as we kind of see here on the ladder, we had this really nice kind of low volume down towards the low. So the premise of this for me is if the market was really started punching away from this kind of smaller balance, it was, you know, it should travel right through to the other side relatively quickly. There was nothing really here to stop it. So again, I've got something on which I'm really comfortable with in terms of just trying to gauge how the market's trading this area, waiting to try and find an extreme. So I'm just going to kind of fast forward a little bit. And like I say, I always like to, like I say, I like to see where the market is kind of, how the market reloads in the spoon. I'm kind of like, when you have these kind of scenarios, you're almost better off hitting through the next best price. So 13 1/4, 13s, you know, were good prices for me to be hitting here. And as you kind of see, we start to ledge on the 13.5. So this is an example of where you could have waited for 13.5 to kind of hold the offer. And then, because like I said, you're expecting such a fast reaction through here. I was quite happy just to clip every price through here. Which, as you kind of see now, that if this was the type of move, this is a really good example, because this was the type of move here that I was expecting. I shouldn't have got filled on that offer that I left at 13.5. So when the 13.5 kind of did go off, and then we had a very kind of small down clip, the market should have kind of held off it, and this price we shouldn't still kind of be churning out here. The market should kind of be really punching away from here. So as we kind of see, the market kind of churns and stalls here for some time, and this was never really the type of price action that I wanted to see. I mean, it was more the fact that kind of just like again, when you have these ideas, you know, sometimes you can kind of get away from what the price action is telling you. So it's really important to kind of be aware as to what the market's telling you. So it was as you kind of had this big volume ledge here, 13.5 and 13 3/4, and once I've kind of, you know, this kind of tight small range is the 1 minute chart. We had the very tight small compressed range here. And when the market, for me, like I say, you've had this kind of, you had a very defined stop, you know, above 15 1/4. I mean, I was kind of using the 15s, if I just pause it briefly, I was kind of using the 15s as my reference here, this very small kind of pocket of volume here. I didn't want to see the market kind of break away from here. So this was kind of my risk at the point, like handle and a half of risk. And I was just trying to work this area. I was basically just trying to attack aggressively, you know, the balance extreme, and not trying to get too caught up in here. And like I said, I was kind of looking for it to punch right through down to the low and kind of, you know, have a potential trend move. You know, but I felt I could start playing from here. Kind of the overnight profile, I felt was quite vulnerable to potentially kind of just flush out positions from the overnight range. And again, at no point you kind of really see that firm reload and kind of, you know, clip straight through. You know, this type of move, that in terms of what I'm expecting and trying to visualize on a really good move, this market should be trading a lot lower, a lot quicker. So when we don't really punch it, you can kind of see I'm very quick to cover this position quickly when we don't get that kind of follow through flush. I remember there wasn't much delta here. Like for example, this is where when you start to see the offer flickering and not actually kind of re-holding. We were kind of trading up a very small size, offers kind of being pulled as opposed to really traded out. That was kind of the first offer we saw traded, but 13.5 wasn't really traded, and then the 13s, 12 and 3/4 weren't. So this just basically was nothing as how I wanted to see. This market should have kind of been really punching lower. The reloading it never really should have gone big. We should never kind of see any kind of flickering or upticking. So I'm instantly scared out a lot of my position. I wasn't really kind of happy with this reaction. It wasn't what I was expecting. The market, I take a loser. I take a loss at the 15s here as a kind of like my risk at that point. So that was how I managed it the first time around. And then basically the second time around, so we're going to revisit. Okay, so again, you can kind of see this was set up really well for it. This is why it's really important when you are trading the spooters, you kind of take lots of small losers. In the process of trying to, you know, when you have an idea and you understand what's trying to go on, of trying to manage your risk as much as possible until, you know, because eventually it will go, and the market can kind of, you know, it can thrash you around for so long. But yeah, you just need to kind of really, you know, make sure you give yourself enough chance to actually trade the idea when it comes about again. So again, you kind of present with that kind of volume extreme here. The 13 3/4, 13 1/2. Notice now where I'm actually looking to position myself in my execution is it's more the 13 1/4 as opposed to around the 13 1/2. We've kind of thrashed out this area quite a bit now. And you have such a distinguished point now, like as a kind of like cut-off point for this type of balance here. You kind of got a prominent, you know, balance of positioning in here. You know, from the 13 1/4 up to around the 17s. And for me, like I said, this whole concept of the move was looking for liquidation, looking for the move to kind of market to push away from this balance and kind of liquidate the underside of that basing profile. So again, you see here kind of where I'm hovering. Again, this was a much better example here because I remember like I could only get the 13 and I could only get the 13s on first attempt, and this was kind of more a move that I was instantly kind of more happy to hit because of the nature of how I was trying to get filled, sort of thing. You know, the fact that I had to kind of pay down straight away. It was kind of everything about it was kind of a bit more purposeful. The way the offer was reloading, the way that like the pullbacks are a lot more shallow. When the liquidity came back to kind of, you know, reload on that area, it wasn't flickering. It was, again, see now if I haven't got filled, you know, you're having to hit the next best price, and it's constantly stacking the offer. Sorry. And on this rotation, I think when we took the low, it was a very, very strong rotation. I think it was about 6,000 lots or so, 6,000 delta rotation. Everything about it was just kind of different. The volume on the breakup was better. My risk here, again, it's really tight. I mean, back above 13 3/4. I mean, we should never be trading back below here again in the first place. So it was all about having, you know, the kind of difference in the price action. This was kind of giving you the idea to play into it. So yeah, this was just basically my idea of how I was trying to trade, you know, based on the back of the overnight profile, based on the cash position, or the cash kind of recent positioning, this big uptrend. You know, using these overnight ranges and overnight kind of setups to help me play into these trades. And for example, so when we did break, so as we see, we kind of get the unwind of the positioning eventually, and we do bounce, and I actually take a scratch. So I'll kind of go back. I mean, this is the thing. Like, I wasn't too worried about taking, you know, leaving a little bit of money on the table at this point, but just like I said, guys, I'll just kind of bring you back onto the overnight profile quickly before we finish. You know, the whole concept of this was, it was kind of quite, for me, it was very clear that the reaction I wanted to get here and what I expected. This was a very vulnerable profile. I mean, yes, to punch lower, but it was also very susceptible to kind of get sucked back up into this basing. And this is why the price action here was so important, especially when you have these steep profiles. Kind of how I tend to trade these is I will attack them relatively aggressively the first time on the underside, in expectation for a kind of a fast liquidation move. But when you don't get that liquidation, the market is very susceptible to kind of churn and get sucked up and kind of balance again. And in the end, that's kind of what we got in the spoot today. It was a very balanced kind of range bound day. But on first attempt, I do like to kind of, you know, especially when it ties in with like that I really liked how it tied in with the cash, how the cash kind of looked at the same time. Like I say, like it tied in with that underside of the value on this really balanced range, gap down. You know, these kind of counter trend moves we get in the spoot tend to be really kind of very straight line and kind of sometimes out of the blue. So for me, it was all about, you know, just trying to position, you know, when you have a kind of idea and an understanding of overnight ranges, and then kind of when how the cash opens up, you know, you can kind of lean on the overnights, you know, as to how you want to see the cash trade. I think it's really important. Even if you were kind of maybe just looking for that liquidation move, you weren't necessarily so kind of keen on the 5.5 or the further downside. that's also a perfectly good trade, you know, which I think is, you know, really valid in its own right. Similar to playing, you know, if you're looking to potentially, once it failed down here, to look to try and pick up for a rotation, to have the gap fill. Again, there was some really kind of